CrowdStrike is trending hard as investors wrestle with a big question. Is this just another AI headline panic, or is the ground actually shifting under cybersecurity? The spark? Anthropic unveiling Claude Code Security, an AI system capable of autonomously scanning, rewriting, testing, and patching production grade code. Not just flagging vulnerabilities, actually fixing them. That nuance is what spooked the market. Why the sell off happened? Historically, cybersecurity's value proposition has been built on proprietary detection engines, threat intelligence networks, human in the loop monitoring, high switching costs, and long enterprise contracts. Platforms like CrowdStrike have thrived because endpoint security is mission critical, highly specialized, and difficult to replicate. The moat wasn't just software, it was data scale, behavioral models, and response orchestration. But Claude Code shifts the framing. Instead of being a copilot that assists developers, it acts as an autonomous agent capable of identifying vulnerabilities across large code bases, refactoring insecure logic, running validation tests, and deploying patches. That compresses the traditional gap between development and security remediation. And then came the narrative accelerant, Claude's reported role in orchestrating defensive responses during what was described as the first large scale AI driven cyber attack simulation. That signaled something bigger. AI systems are now participating at the operational security layer. What the market is really afraid of. The fear isn't that CrowdStrike suddenly becomes obsolete overnight. The fear is margin compression. Investors are asking if AI can embed good enough security directly into development workflows, if vulnerabilities are caught and patched before deployment, if remediation becomes automated instead of subscription based, then does the pricing power of high margin enterprise security vendors weaken over time? In other words, is AI becoming a substitute instead of a supplement? That's what triggered the sector wide sell off, not just in CrowdStrike, but across legacy enterprise security names. The bull case? Overreaction and structural strength. A large portion of the community is calling this move irrational, and they're making some strong points. Security is not just code. Cloud Code addresses application layer vulnerabilities. CrowdStrike operates deeply in endpoint detection and response, EDR, identity threat protection, cloud workload security, threat intelligence, and managed detection and response. You can't patch away a nation state intrusion campaign with refactored code. AI creates more attack surface. Every AI advancement increases complexity and attack vectors. Autonomous agents introduce prompt injection risks, model supply chain attacks, API abuse vectors, which may actually increase demand for enterprise grade security platforms. Enterprise trust and compliance. Fortune 500 CISOs don't rip out core security infrastructure because of a single AI release. Compliance frameworks, audit trails, and integration depth still matter enormously. AI is an arms race. CrowdStrike itself heavily integrates AI into its Falcon platform. The idea that AI only threatens incumbents ignores that these firms are also deploying advanced ML and generative AI internally. The bear case? Structural disruption. That said, skeptics aren't crazy. If autonomous AI agents integrate directly into CI CD pipelines, continuously refactor insecure code, reduce vulnerability dwell time to near zero, then prevention shifts left dramatically. That could pressure standalone remediation focused software categories and change how security budgets are allocated over time. This isn't about 2026 revenue, it's about 5 to 10-year margin durability. What this debate really signals: the market isn't pricing current earnings risk, it's repricing long term defensibility in an AI native world. And when uncertainty hits high multiple stocks, they move violently. Some investors see a generational AI driven margin collapse risk, Others see a classic AI panic headline creating discounted entry points in category leaders like CrowdStrike. Bigger picture. AI is no longer just assisting security teams. It's writing code, exploiting vulnerabilities, patching systems, and defending networks. That evolution forces a fundamental question. Will cybersecurity platforms become embedded AI layers, or will AI agents disintermediate parts of the stack? Right now, the market doesn't have that answer, and volatility is the result. One thing is clear: this isn't a minor product update. It's a signal that the AI arms race has moved directly into core infrastructure security. And whenever infrastructure shifts, incumbents get tested. The debate around CrowdStrike isn't about next quarter. It's about whether elite cybersecurity platforms remain indispensable in an era where AI can both attack and defend autonomously. That's a much bigger conversation than one headline.
So CRWD lost 7.95% yesterday, the 20th of February 2026. Volume was 8.3 million shares. Before now, the stock had been, it's been showing a lot of weakness within a longer term bearish trend, neutral to bearish trend. We got a rejection of late after it beat to resume the uptrend. So Friday, exactly 1 week ago. Since that time, it's been, as a matter of fact, yesterday was actually the second straight session of losses on the stock. So the extrapolation we have here for its 2 day, 3 day moving average is saying that this weakness may remain in place up till Tuesday, the 24th. Possibly by the 25th, Wednesday, the 25th, it might attempt to it might attempt to bounce or resume the uptrend. And it's saying here that it might do so and may hold it up till the 18th of March. After that, we are looking at a possible consolidation towards early April. Okay, this is pointing to so many days ahead. There's no guarantee that will be the case, but the fact that we have the extrapolation pointing to a bounce is positive. But it's also notice here it's not pointing to a resumption of the uptrend. It's actually saying that maybe it has been over. It may have been oversold. This is probably where it's supposed to be trading, especially if up till early April. Okay, we're looking at this level between 425 and 417. Okay, projections are saying let's see what we have: 426.68 and 435.59. They're still being reiterated. Yeah, in a very short term, some stability is expected to some extent. Some stability, okay, is expected based on what we have here. Not so volatile, but not extremely volatile. Okay, we can have a look at the 40-day moving average. Let's just see, jump all the way to the 40-day moving average to see how stable. Okay, still very much, still some more volatility is expected, not so stable. Let's see the 200-day moving average. Let's see, I'm sure it's going to indicate some volatility as well. I'm sure it's not really going to indicate stability as such. Let's see. Yes, not so stable, not so stable, but not as bad, not so stable, but more of contraction is expected. Momentum is expected to continue to weaken, yeah, up till early April. So just see what you make of all that is going on right now. AI, I don't think it's there's a lot. This is over. I think overreaction is going on right now. Um, some overreaction is going on right now. If you deploy AI, it's going to create issues, not issues, problems to be solved. So humans are not going away, and CrowdStrike will still be relevant. AI security codes, they will continue to create problem issues that humans have to come and create agentic AIs to solve as well. So it's a cycle. It keeps on going round and round and round. So the end is not there. It's yes, we are just concerned. I think just there, it was rightly mentioned there, just margins. That's the concern. But I don't think it's this selling pressure going on right now is a bit of well needed, possibly needed, but enterprise software companies, they're not going away. Surely there's some disruption going on, but they will still be needed. highly sorted after. Yeah. Thank you very much for watching this video.